Good morning, guys. Felix here. Welcome to this live chat. It seemed we went online automatically. Slight change in software here, guys, but fantastic to have you on this call. So big good morning from Hong Kong. Don't worry if I was looking a little confused and baffled there. I've changed my streaming software and it's doing things a little bit differently to the old one, but it is all good. We are connected and I believe, guys, you can hear me. So fantastic to have you on here, guys. Albarello, big welcome to you then. Mortas back here. Great to have you on the chat. What are we going to talk about? Kiddos, Albarello, posting goats, cows? What is that? Dogs? I don't know. It's all good. It's all good. It's fluffy. It's all good. There are quite a few things I want to touch on. Quite a few of you guys have been talking a little bit about NIO Capital, and I think a lot of people don't really understand what that is and how it fits in and who owns what. Alan, good to have you on the chat. So I think we can talk a little bit about that and when it was set up, how it was set up, and how these sort of private equity structures really function. And another thing I'd quite like to look at is basically 10-year bond yields and what it really means. And I've got it open here, if you can see, it's together with the Bitcoin chart. And you might be thinking, well, Bitcoin, whatever, but look at this. I mean, does this not look like correlation to you? It's on the same time frame. You can see that here, the dates. It's quite hard actually to get them exactly the different time frame because Bitcoin trades 7 days a week, whereas most other things in the world have weekends, so you're slightly off a couple of days. But anyway, you get the gist. It does seem as the bond yields go up, Bitcoin goes up. It isn't necessarily causation. That could, of course, also be an indicator of just markets getting more, elevated, more frothy, and therefore a Bitcoin rising along with it, and bond yields going up as a result of that. We are actually down again with the bond yields to 1.54. We were up above, sort of around the 1.59 mark or so. So calm down a little bit. And I think that's kind of what eased off us into this lovely weekend here. And you can see Bitcoin absolutely flying over 60,000 US dollars. Absolutely incredible. Alan is talking about the CEO resignation. Absolutely. We can definitely talk about that. What's the impact? We talk about NIO price prediction. Absolutely. We'll do a quick technical analysis of NIO. Can you give us some updates on Coupang? I'm waiting for a good entry price. That's Albarello there too. Okay, fantastic. We can do all of that, guys. Absolutely. Well, why don't we start off with the CEO resignation there. We weren't really given an official reason for that. I don't really expect us to. We were just told it was for for private matters, whatever that means. I think quite honestly, it's a good move because there's so much bad news in that stock and in that company because of all the regulatory stuff, and obviously somebody has to be blamed for it, right? Because they did do some lending things, particularly that were a little bit on the edge of what was kosher, I would say. If you put up only 2 or 3% capital and you run this enormous lending operation, and you're kind of saying, well, we're not a bank, but we take deposits and all these kind of things. You can kind of see, I totally see where the regulator is coming from. I think the regulator in any country would have come down on them, with a ton of bricks. What does it really mean? I actually think it clears the air. And I know you always say, like guys say, that guy's just too happy and too bullish about Alibaba and all of that. But I think it is. I think it's a step in the right direction. I mean, imagine if you had an enormous corporation in the US and they were, being investigated for all sorts of things, and they had an enormous IPO being cancelled. What would happen sometime down the road when things were almost settled, most of the things were taken care of, the CEO at the time would resign, make way for somebody else, and that way you haven't got this overhang and everybody can point finger at that guy. And I think that's incredibly unfair to always paint it on one person, but that's kind of what happens, right? People like to blame somebody, so they are blaming somebody here, and I think the CEO is basically the fall guy here. So I actually think it's a good thing. Of course, the news media, internationally speaking, it does not interpret anything as a good thing for Alibaba and in the last, how many months is it now? 5, 6? But I think it is just one more step forward. That's basically the way I look at it. Does it really matter who runs, who it is who runs that? Probably not. I don't think him as a person, I think he's a brilliant individual, but I don't think the company is going to suffer from that massively one way or the other. So I think really it is a further step in the right direction. So how will Bitcoin affect tech stocks? This stock says jazz there. Okay, well, I think that's also an interesting one. So why don't we replace this one here at the top with the Nasdaq? So you can see here both Nasdaq and Bitcoin moving. Hang on, let me align this just a little bit more. Yeah, that looks pretty good. You're always a day or two off with these comparisons. Why? Because Bitcoin trades 24/7, 7 days a week, whereas stocks do not. So is that strong correlation? Well, I'd say there is a fair bit of correlation here. I'd say they tend to move in the same direction. You look at the little bumps and kinks, largely speaking, I think they do. So I think you could look at it two ways. CP, good to have you on the chat here, guys. I think there's two ways of looking at it. You could say, well, the money is fleeing into Bitcoin. People are afraid of inflation. Bitcoin is perhaps the new gold. It is perhaps a new gold hedge. That's why the money is going there. I do think the amount of stimulus we're getting should help stocks. I mean, 1.9 trillion. I think that's more than the GDP of Canada. It's 10% of the US GDP. And that's just this one round of stimulus. And, actually, what are we going to get for it? A couple of percent growth, right? It is good for markets, absolutely. I think it is also an enormous waste of resources. I think it's probably the least efficient way you could hand out money. But that is, I suppose, beside the point. Everyone's just happy to receive a check, so nobody really asks any question. But somewhere down the road, I mean, it's just causing basically massive debt. What does massive debt, US government debt cause? Well, I think it actually causes long-term low interest rates because the government can't afford to have high interest rates and therefore they won't. And that's basically what you see in countries like Japan, right, who have massive debt but no interest rate, and therefore debt doesn't really matter. But that's slightly besides the point. What is it going to go to tech? I don't think it has a negative impact on tech. To be honest with you, I don't think it does. I think it's part of the same story at present. We might at some point see them diverge, but at the moment we are not. Right, guys. Okay, you guys are talking about NIO technicals. So let's do that. Let's do a NIO technical analysis. Let's see where it's going, what it's up to. Let me close my Bitcoin window down here. Right, just the one. And candles is what we want. And we want no, we don't want the 10-year treasury yield either. We want NIO. Here is NIO in all its glory. And let's zoom in a little bit, guys. And let's turn on some of the stuff that we need to be able to tell what on earth is going on here. So here we are. That's looking a little bit better. So you can see our previous annotations. I have not changed a thing. We can go in a little bit closer, so it's easier for you guys to see. That's about where we were. So we drew in this this blue kind of channel here, and that's what we're moving up in. Now, on the last day of trading, we moved a little bit sideways. And actually, if you watch my last TA, I was actually saying, we might not go up like that. We might end up doing a bit of this. And actually, I would like us to do that kind of thing. Why? It's preferable. And it's preferable simply because, okay, when we did this rally here, right, we rallied up here in this direction. We didn't stop. We didn't take any breaks. We didn't have any kinks. We didn't have any zigzags. And therefore, when you fall down again, you fall down like that, like a hot potato, because there's nothing to hold you. There is no support. And how do you build support? Well, you build support. Let me get rid of some of these lines. Had we gone up in that kind of a fashion, then each time we hit a low, you would have built support, but we didn't. So therefore, we fell down very, very rapidly. And that's exactly the issue with fast-growing stocks, is you just don't get that kind of time to build in some support lines here. So what are we doing here, actually? We're actually building in some support. And we've built in some very nice support here and there and a little bit there. And now we're trying to get back over these levels here. We're basically trying to get over 46 12 or so now, and you can see that was the resistance line there. Can you see that little green bar here? It didn't manage to get quite through it. So what's happening here? Well, the reason we're trending sideways, I would say, is my green arrow down here. And I was saying that again before the trading day, that I was a little concerned that our volume had fallen off a little bit here. See, volume had fallen off there, and then I said, if volume, watch out for volume. Volume, guys, is precisely what I said. So if volume goes down some more, I'm a little concerned, because when you are on a rally and your volume declines, it basically indicates that rally is not going to increase much further, right? So what we are seeing here is that volume is falling off a little bit, therefore we're trading sideways a little bit. But you know what? I actually think it's fantastic for the stock. I think it's good for the stock to go down 1% or 2%. That's a normal kind of steady level. If we then next day, hopefully we'll go up 3%, and then maybe we go down 1% again, and we might go up 3%. And that might not be quite the growth that you want. But bear in mind, guys, this thing is still up, I don't know, 1,200% or something since the summer. So if we want to get stability into NIO and make it become a little bit more of a mature stock, that's actually what you want. You want to keep zigzagging up. So let's have a look at some indicators, because that's actually what you're asking for. You're not asking for my endless ramblings on about which way I think the stock should grow. You just want it to go up, and I appreciate that. So I'm going to pull up here Williams R down here. Now Williams R gave us a very nice buy signal here, basically at the end of the 10th. I'm going to put that line in here, and you can see my line is off, but I can't. It snaps it in the software into place. It should be exactly where that blue line crosses that dotted line. That to me is the buy signal, and that happened, I'd say, at the end of the 10th of March. So that's a positive, and that momentum is still very, very much alive. I'm just going to exaggerate it here. It's doing that at the moment. You can see that here, right? The line is going up. It is positive, and therefore at the moment that indicator basically points to very positive momentum. Now if we look at and combine that with MACD, now MACD is a little more of a slow moving one. I think they make a nice pair with William R or with RSI alternatively. What we're seeing down here, and this is on a day basis, guys, so it's a little bit slow. We're seeing all that sell-off indicator, all those red bars fizzling off until it gets to near zero, and then we see just about the blue line hitting that MACD signal line, again giving us a buy signal. And if you went in a little bit more short term on a 4-hour basis, you would have seen that we actually had that buy signal there on the 9th of March. But on a day-by-day basis, as it moves a bit more slowly. Why do I look at day-by-day? Because it gives you a more longer term, a more medium term prediction than the sort of 4-hour basis, because I don't tend to trade on a 4-hour basis. I prefer to trade on the longer term basis. So that's looking pretty positive there, I think. That again, a positive indicator. We are also approaching still up here the moving average line, right? The moving average is at 47.80 at the moment. So it might be about 48 in reality. That is again our resistance. But really what we need to get through is, let me zoom out a little bit here so you can see where these blue lines end. Hang on. Let me put in our Fibonacci again. Here we go. Okay, more lines. You're thinking, more lines? This man's crazy. More lines, right? So what have we done? Well, we have. We basically need to get through our 46.12, and the reason for that is again fairly simple. It was a more or less our low here on that day where I put the red line. You can see my line is slightly off. Perhaps it's 46.10 or something like that. It was also the intraday high. Sorry, it was the opening here on this day where I'm pointing the arrow out here a couple of days ago. That is the 2nd of March. And then it was again the day before yesterday, it was also the high point there. So that is something we need to get through. That is about 46, 10, 12, something like that. A few cents here or there, it don't really matter. Then if we do get through that, basically our next barrier becomes this Fibonacci line here at 49.45. So basically the way I look at this is either tomorrow we go and we break 49. Sorry, I said tomorrow. Is it tomorrow? Tomorrow is Monday, yes. Either we go through 49.45, in which case we're flying, or we might retrace our way back down to 40.19. And you might not like to hear that, but I think both are at this point possible. Now, momentum indicators are pointing upwards. So you could say it's more likely we are going to go up through 46 and then up to 49. We are above this Fibonacci line of 45.31 because we closed at 45.50. That's a positive. So that will lend us some support. So 45.31 will lend us support. If we break below 45.31, then basically our next support will be around here, 42.75. And I'll just summarize this in a second. But you see that one here? That is a triple support. So there, 1 day, 2 days, and then another one over here, more or less. So that, again, gives us quite good support. So actually, it's fairly unlikely, I would say, that we fall down to 40 unless some massive event-driven thing happens. So Nathan says, yes, absolutely. I'm in Hong Kong, so tomorrow is Monday. It might be Sunday for you. That's why I hesitated slightly. But so what I watch, okay, the three numbers I'd watch out for on Monday. I watch out for, do we fall below 42.75? Because that's our real support level here. If we do, then we are likely to go back down to about 40.19. If we break through 46.12, then our next resistance upwards is 49.45. I think that's as clear as I can sort of make it. Momentum is pointing upwards. All the momentum indicators are pointing upwards. So we are on a positive momentum here. However, these technical analysis is fantastic in kind of mimicking human emotion, human psychology. I think it's absolutely brilliant at that. It doesn't know external events. So it doesn't read the news. It doesn't know about, Tesla factories catching on fire or, 10-year bond yields shooting up. It's not that kind of an indicator. So it's very, very useful, I think. And if you've been following this for some time, you actually see how accurate it is and how these resistance and support lines really, really work out a great deal of the time. And of course, as always, guys, this is not financial advice. Look, I've got a little banner even for that. It is not financial advice, guys. This is just for entertainment only. Do bear that in mind. Now, so I am fairly bullish on NIO, I must say. At the moment, there is, of course, this overhang of what we had just open here just now, which is 10-year bond yields. Let me get the 10-year bond yield back up here. All right. There we go. Let's see if we can get that on a similar scale. That's about it, I would say. Is that about it? Not quite, almost. So if we, let me just make that a line so it's a little easier to see for everyone. Is there correlation? Well, okay, people are saying there should be inverse correlation between the two, right? And we can go out a little bit more. We can go out to, say, October or so, December, November, October. That's about the same. So let me reset that. Do you see a direct correlation? Not really. Okay, it really only starts to make sense from sort of 9th of February or so onwards, when checks started to sell off a bit, 10th of February. Again, a little hard to get them. Okay, here we go. So can you see my little dotted line there? So that is what people are saying, is that basically from when this red bar started accelerating in terms of slope, that's really what this is all about. So it's not about actually the actual numbers. It's just about the speed of which this is going up. So if I put in the trend line, say up to here, and that is the average movement of the 10-year bond yields. And then here you can see there is a change of angle. It's moving up faster. And that's what people are worried about. That is what people are a little bit, concerned about here, is that if this goes up at this particular trajectory or even faster, then we might be a little bit in trouble here. Now, actually, the 10-year bond yield is lower now than it was a couple of days ago. It was at 1.59 last time I looked. Now it's 1.54. So I suppose it really depends on where this is going to go. I think some people who are a bit bearish are saying this could go as high as sort of 180, 190, or even higher than that. Brandon, thank you very much there for your kind support. Much appreciated, guys. You can also join our Discord and Patreon channel with lots and lots of good stuff over there all through the day and join that discussion. So I don't see this exact inverse relationship that people are saying here, particularly not with NIO. Why? Well, a lot of other things come into play, right? But the tech sector overall, yes, there is a bit of that. The tech sector does seem to get hit over the head when the bond yields go up. So this is definitely something to watch out for, especially for short-term plays, right? It depends very much on your long-term horizon. If you just think, well, this is a stock that in the long run is going to do fantastically well, and they're going to make lots of money, and it's going to compound, and they're going to have a huge market share and all that kind of thing, and they're going to be massively profitable because of all the subscription businesses, then you could sort of say, well, you know, I'll just take the dips and I'll see them as an opportunity. But if you are trading on a much more short-term basis, then these things become more important. Now, are we going to see inflation? You know, I'm not in the inflation camp. I'm basically saying that we're going to get deflation. That's the only thing I'm worried about. Why? Because last time we had massive inflation, I'm going to keep this very short, guys, on inflation, and we're going to get onto the stocks you guys want to talk about. It was in the 1970s, and the US at that time wasn't importing everything. Manufacturing costs were not falling drastically as they are now. Basically, everything we buy now is cheaper than it was a couple of years ago, right? I mean, from everyday household items, garments, clothes, cars, everything is actually cheaper, except perhaps for luxury goods. But that's a choice. That's not a requirement to purchase those. So I just don't really see where will you get inflation from. Are you seeing unions stamping up and down, asking for 8% pay rises? Don't think so. Why not? Because everyday expenditures aren't really going up, right? So I don't really see government spending as causing inflation. And they have just spent 10% of the US GDP. I think from a taxpayer point of view, that is an enormously unfocused way of spending money. Really, you know what they should do? Someone's mentioning PLTR here. They should hire Palantir, and they should combine the tax data, the home ownership data, the credit data, car ownership data, and then you find the 5 or 10% of Americans who are really suffering because of COVID. You give them money, and you can look at the businesses that are really suffering. You give them money, and rather than giving everybody money. And I appreciate a lot of you guys are in the US, and you enjoy getting the money, even if you don't need it. But you know, for the US government to give people money and then they put it into Tesla stock, it's great for us investors, but it's not really the greatest allocation of resources. But okay, that's enough of my political rant there. What's PLTR doing? Okay, guys, let's have a quick look at PLTR. We have a PLTR chart here. Exactly. So PLTR in its glory here. So again, actually, we had a similar story when we looked at this. And again, I haven't touched this, guys, since the last TA. So you can always see, I'm always very happy to point out when we've done things terribly badly. What you can see here, we put in that pink line, and that was basically to connect the lows of each day. And I was saying, look, each day we have a higher low than the next day. So we actually on a rally, even though it didn't really feel like it for some days. Now, this last day here has a slightly lower low, but it has a higher high. Are you with me so far? That is therefore still a positive. I'm actually was very pleased that Palantir went up. Even if it's 0.7%, it went up in a bit of a mixed day for stocks. So I think that's a positive. So the positive momentum there still holds. Now, from a technical point of view here, this is RSI, which moves a little bit slower than the Williams R I used for the last chart. But even there, you can see the RSI line is just, looking over that little line and just about there. So that gives us a buy signal, actually, just here on this last day from RSI. If we looked at Williams R, I think you'd get the same thing a little earlier. Yes, you do. You get a buy signal on the 10th of March. So let me put that in here. And then very, very clear momentum. I mean, really, you don't get any clearer than that. It is just shooting up, straight up into heaven, basically. So that is very, very, very positive. It is, however, now up in the overbought territory. And that's basically the area, let me get a pen, the area up here, that bit there, that is the overbought territory, what I'm drawing in rather badly. Where are we? We are at -7 up here. So if I put in a line there, you can see we were higher. We were at basically 0 on the 22nd of January. So let me just follow that line over here. So, we still have some way to go. It does, though, to me indicate that we might be hitting a plateau fairly soon. And I think what I would expect this to do, I think we might go a little bit higher. And then I think we might go down a little bit, test some of those support things we've built in there. And I would kind of expect this to do that kind of a situation. I think that's where I would say this is going. If we look at MACD, guys, so that also gave us a buy signal here on the 11th. So just a little bit later, 1 day later. Why MACD lags the market? It always does, but it is still a good indicator for an upwards trajectory. So at the moment, that is looking good. Again, what you want to watch out for is you see these little green bars here down here, what I'm magnifying. You want them to get bigger every day, and you want them to stay dark. If they go lighter color, like they have here, for example, then you are basically at the top of the peak and it's fizzling out slowly. So that is what I would watch out for here. So in terms of numbers, let me close these guys so it makes it a bit bigger for you guys. What are we looking at here in terms of numbers? Okay, let me see. So we are here at 2692. Where are the next resistant lines? Well, actually, you can see, this is always quite interesting to see. You can see very much why we stopped where we stopped. And I'm going to put in 2 arrows here for you. There's one here. And one more there. You're thinking, why is this man drawing so many things? Okay, can you see the little dotted line here? That is the closing stock price. And you can see it stopped pretty much exactly where these 2 days ended. Where the lows were of these 2 days. And that's kind of how this works. That's how the psychology of it works, is that you look for days where it was the high or the low, and that's how you build your support or your resistance in this case. So that is why we have that here. Now, where is our next resistance line? Well, it's probably there is not very much a strong resistance here, because you only have these sort of single days that have touched these day points. So you could say there might be a little bit here at 27.34 and at 27.56 or so, but really the next major one is up here at 29.66, and there isn't much in between. And that's quite a jump, of course, but that is basically our real resistance upwards. So 29.66, support level lies at 26.04. So, you know, let's hope we stay in between those two, and then we'll have that sort of pattern upwards. If we don't, then, well, I would look at yesterday's low. In fact, yesterday's low was 25.18. That will act as a support. So I think let's leave it at that. Otherwise, it's too many numbers. As a support, yesterday's low was 25.18. We also have 26.04 as a support. So those 2 are support lines. And then on the way up, we basically want to get up to 29.66. Mohammed is asking here, well, welcome to the chat. Do you expect Nasdaq to go down before markets opens? Well, the easiest way of looking at that, quite frankly, is to just have a look at this. It's NQ1 exclamation. It's the strangest ticker in the world. Here it is up in the corner. Can you see it? NQ1 exclamation. That's the Nasdaq Futures. What does that do? Well, it predicts the future of the Nasdaq. And generally speaking, when the Nasdaq Futures are in the red before market, the market opens in the red. So actually, I don't need to be a genius for this. You simply look at it. At the moment, it's sitting here at minus 0.95%. So I always look at that before the market, and you might want to do the same thing. These are the Nasdaq 100E mini futures with that rather strange ticker of NQ1 exclamation. So at the moment, yes, it is looking like that. Also, you can see another very good indicator for that is volatility, the Nasdaq volatility. That is VXN. That's the ticker that is up a little bit. When volatility goes up, the market tends to go down. That's kind of how this works. So yeah, so you guys are talking about ARK, or Kathy rather, investing into NIO. I don't see it at the moment. And why is that? Because Tesla and NIO move so incredibly similarly. Let me open here this one again. Let me change the bottom one to Tesla, and then you can see it. And you can basically see that I am not in line, because these two really move very, very, very similarly. And I don't know why I've got a line chart down here, but there we go. So we need to, apologies guys, I need to align this a little bit, and there we are. And let's get rid of all the annotations, and then you can see, I'm not quite aligned yet. There we go. I'd say that's probably as good as we're going to get. Yeah, there we go. So can you see that the chart is pretty much the same? And you know, there are periods where we are moving slightly differently. You know, this area here. Oh, sorry, not everything comes back on. But you know, there are areas where they move a little bit apart. But generally speaking, these are incredibly closely correlated, and it's Tesla that makes the market. So I think from Cathie Wood's point of view, she wants to reduce her portfolio to her like core ones. Also, she's suffering some outflows. So for her to buy something that basically mirrors Tesla at this point, largely. I think it doesn't make a great deal of sense. I think eventually they will move separately, but for the time being, they are incredibly closely correlated. So thanks very much for that, guys. Guys, if you do have questions, do shout them out. I will definitely look at that. I can see Riot and Mara popping off on Monday. Possible, quite possible. We also had some. Did you guys follow Coupang? Anybody follow Coupang? What they were doing. Actually, maybe let me pull that up in this window here. So Coupang, of course, only been trading a day or so. So you kind of have to look at this on a very close basis. In fact, did I did do some analysis on this in a window somewhere. Okay, we could do it again here. So what's going on here with Coupang? Well, they are quite frankly selling off below their stock price. If you watched my pre-IPO analysis of it, and I also put out a on our Patreon over here, guys, a comparison. And I think it is always good to look at some fundamentals when you buy into these things. And that is, you see Coupang here, I've got that in here. Coupang is not profitable yet, right? So Coupang, by 2025, when they will be quite profitable, about $1 billion in a bit, they'll then have a PE ratio at the current stock price that they were issued at of 41. Now, I can buy JD at 31, Alibaba at 25, Amazon at 72, but then Amazon has a cloud business. Coupang doesn't, and Amazon is also the dominant player in the US. Coupang isn't. Coupang has a market share of somewhere between 12 and 19%, depending on who you believe. So they are a good company, yes, but I think the valuations are quite rich. So for that kind of valuation, that's 2025. I personally rather buy Amazon, to be perfectly honest with you. And it's a little bit of a shame because I do like the company. I like the business model. I think they are, from a business point of view, doing everything right. But I just think that SoftBank here wanted to cash out. The words of the SoftBank chap were, this is harvest season. And when I hear someone who's selling, and when it's a direct listing, right? When it's a direct listing, where does the money go? Does it go to the company or to the investors? It goes to the original investors. It's basically investors selling shares. It's not the company. So the company doesn't get this bonanza of, 10 billion or 5 billion US dollars, which they can reinvest. No, it is just the private equity guys selling out. So that's why actually with direct listings, always be a little bit cautious because the companies do not get the benefits of the actual IPO that you would normally get. And normally the point of an IPO is to raise a ton of money so you can expand faster. Not really happening here. So that is kind of why we're seeing this, this story here really, right? Now, is that going to continue forever after? Well, perhaps not. The last 4 hours, people were buying in again, but you are getting closer to a more sensible price. Market cap is still 83 billion, right? Last summer, this company was worth 30 billion. So it does kind of show you how, these valuations, I think, are a little bit tough to justify. I really think. And if you look at it on a price compared to last 12 months sales, and last 12 months they had 90% sales growth, not something they'll be able to replicate. And even on that basis, they're valued at 4.85 times last year's sales. Amazon trades at 4 times last year's sales, eBay at 3.6, JD at 1.3. So you kind of see the picture there, right? That it is just, they've gone for a pretty solid number there. And I don't blame them for it. I mean, that's what smart investors do. It's just a question of whether you want to chuck your money in on that. So I think potentially Coupang has quite some way down until it reaches a valuation that I think most of the market can live with. You know what would be really interesting to see is what institutions have bought into this. And we're not going to see that for some time, sadly, because the US only reveals that quarterly. But I think that would be really interesting. I would be kind of think that most institutions kind of didn't jump in on this. They also didn't tell us much detail. If you read their listing prospectus, for example, they didn't tell us how many employees they had, which is a pretty unusual thing to do. And why is that? Well, because actually South Korean wages are incredibly high, and sort of they have some labor issues there too. So they just simply didn't tell us. So it's a little bit strange. They didn't even tell us what part of their expenditure was spent on salaries or on labor generally. So I thought the whole thing was well promoted. And also incredibly quickly. Normally these things take 14, 16 weeks, and they did it in 3. So I kind of felt like they just rushed this through. Don't ask too many questions, guys. Let's just get some money here. But that's just my take on it, guys. I'm sure some of you will make money with that. EOIN, you're asking a great question here. Why do people think American inflation is a worry for Chinese stocks such as NIO? It's a very good question. So American inflation, no one's particularly worried about American inflation, but American inflation would mean higher interest rates. Higher interest rates would mean that the Fed would stop printing money at the insane rate it's printing money at, and therefore there will be less money around that goes into assets. Because most of that money that the Fed is printing basically goes into Wall Street. It doesn't go to your average man on the street. So American money invests in companies all around the world, and the US is still by far the largest stock market, right? So that's why Chinese companies want to list in New York. So if there is less money available to US stock investors, they will put less money into companies like NIO. And why is NIO particularly affected? Well, the tech sector is particularly affected, as is the EV sector, and that is because they have gone up more than anything else. So that is kind of the story there, that whatever goes up the most in one of these booms gets hit the hardest at the top, because the valuations are the hardest to justify. Let's say if you look at consumer staples, they've gone up 23% over the last year. Tech's gone up 90% or something like that. So you can see why that one gets hit the hardest. So it's nothing to do with the fundamental performance of the underlying company. It's all to do with just investor sentiment. And, American money is a huge pile of money. So it matters. So it doesn't have anything to do with Chinese companies. NIO could have a fantastic year, but the stock price could still fall off the cliff if the US government stops its stimulus and the Fed stops printing money, or if they just announce that they will. That's also enough. So at the moment they're doing the opposite. So at the moment we are looking quite happy here. CMS, you took a short-term position in Baba. Any thoughts on short-term? Okay, I think the word short-term and Baba do not go together at the moment. Let's pull up Baba here, guys. By the way, all these charts I also share with our Patreon and Discord community, as always, so you can get access to my actual charts here. So where are we with Baba? We are basically moving sideways. And when we're moving sideways, well, yesterday down another 3.7%. We are down again now to 230 or so. We were down as low as 229 during the day. And basically, the stock has just been hit fairly hard, as you can see. So this first, let me just get a pen here. This first area up here, that's the ant listing not happening, right? We then had this second part here. That was the Alibaba group investigation. That's the second fall that we had. We then had a recovery because people were kind of thinking, well, what's the worst that can happen as part of an antitrust investigation according to Chinese laws at present? Well, it's a $6.8 billion US fine. Alibaba is sitting on something like $75 billion US of cash. So it is chump change for them. They don't really care. So therefore, the stock went back up to basically ignored the antitrust situation. Now it's coming back down. Why? Well, I think one is people are impatient. People do not want to wait till, say, the end of the year when perhaps Ant might announce it'll relist. And also the media coverage on Alibaba is probably the worst it is, or certainly out of any of the Chinese companies. Why? Because that's probably the one Chinese company people know about, and Jack Ma is usually the only Chinese individual that people have heard about. So therefore, it's getting a lot of that negative coverage. So I've been saying basically, guys, since the beginning of the year, I think the valuations are absolutely wonderfully appealing for someone who's a long-term value investor, but a lot of patience is required. And I think essentially we need to have that fine done. and we need to have and file a new IPO prospectus and for that listing to go again. And I think then we are flying again. And if you look at, for example, as a comparison, JD, let me just pull that up here, who are a pretty close competitor, of course. Here is JD. So you can see the orange line here, JD. So JD essentially continued on the same trajectory that Alibaba was on. Yes, they've got hit a little bit by it, but now they're kind of up here. And okay, this is kind of the sort of tech worries that we're seeing at the moment here. But there are the gap you see between these two. This here is a valuation gap that I think doesn't make any sense. So apologies for the lines there, guys. But that difference you wouldn't normally see because typically they trade very much in the same direction. So what does that mean for me? For me, that means that we have at least 40% upside here on this just to catch up with JD, and possibly 75-80% once we have an IPO filed again. But as always, guys, this is not financial advice. This is just my perspective and my entertainment here. Okay, Oliver's asking here, as we are talking about Alibaba and IPO, would you invest in it? I would. Yes, I would. I think it is going to be... Okay, on the last IPO, it was meant to be the fourth largest financial institution in the world or something. Now, this time around, it might be the sixth largest or something, but I don't really care. They are still going to be China's fintech giant. You might have seen some of the news that they are... Well, Alibaba Cloud is handling China's third-party online transactions for the government, together with Baidu. So that's surely some faith in that. That was only awarded that contract, that tender, about a week ago. So I did a video on that. And is just issued Antcoin. With whom? Well, with the Central Bank of China. And it is basically to make transactions easier, more accessible. You'll be able to move money out of wallets, out of, say, Alipay wallets without having to use bank accounts. And again, it also is, of course, helping people who don't have bank accounts. So still, a rural population that do not. So, here's the Chinese central bank working with Ant to create Antcoin, essentially a crypto. Now, a more regulated crypto because it's basically the Chinese renminbi. It's pegged to the renminbi. But it just goes to show, I think, the positioning that Alibaba and Ant have here in China. It is not what the Financial Times reports 3 months late that it is. So I think the international news coverage on this stock is particularly unfavorable, and that is an issue, of course. Because we do rely on international investors to move these stocks up. Now, Ant is an interesting one because we're listing here in Hong Kong, and when they refunded everybody from that IPO, there were 1.5 million Hong Kong citizens, individual retail investors who got a refund. 1.5 million. So this stock will actually be much more democratically held once it lists than perhaps a New York listing would, where large corporations, large funds gobble up quite a lot of that. So, CP says, "I love Baba." I do. I could talk about Alibaba for hours, and yes, that should come with my disclaimer. I also own Baba stock, 998 stock. That's not why I'm pushing it. I just think, from a valuation point of view, I think even if you compare it to Amazon, and I'm not saying it's going to catch up with Amazon because one is an American, one's a Chinese stock. I appreciate the difference. But I just think it is a hugely profitable stock. They have huge amounts of money, fingers in every pie, cloud coming up. It is already profitable, but that's going to be a big contributor there. They have 55% market share of e-commerce business. Coupang has, 11, 12, 19% or something. Where would I rather put my money? With the one dominant company or with one of the 5 companies in the market? Well, I prefer to go with your sort of Amazon, because I think there is that advantage there, infrastructure and everything. So. Right, guys, lots of questions here. So is Baba market share growing or stagnant? It is, okay, they have something like 900 million monthly active users. So they can't double that, right? That's just not possible. And that's why I think ARK, for example, is investing into JD, which is the orange line here in the background, because JD has, I can't remember, I listened to the earnings call, what is it? 300, 400 million or something like that monthly active users. I might be off by 100 million on that. Apologies, guys. So you could see that they could, in theory, double that number, right? So therefore, people are a little bit more excited about that. So their e-commerce business, I think it's going to be stable, but I think it'll continue to be profitable, and it's incredibly profitable. It's not okay. Amazon makes, what is the margin? 4%, 5% overall, including cloud, right? Alibaba just on e-commerce makes 20%. Why? Because it's a platform. It's not a retailer. They haven't got any inventory. So they don't have to pay for inventory. They don't have to warehouse. They don't have to do any of that. They are platform, third parties list the product on there. They pay for the listing. They pay monthly fees. They pay for advertising. Alibaba then fulfills it. So Alibaba makes money on the logistics, the delivery, all of it. They make money on all of it. Then they lend money to the suppliers. They lend money to the purchasers, and they make money on that. They just make money on the whole process, and they're basically just the shovel of all shovels. Whereas Amazon is an actual retailer, so therefore the retail margins are appalling, right? I mean, if you run that sort of a grocery business, they make 2, 3, 4%. It's fairly appalling. You sort of think just close the whole thing down and put it in bonds or dividend stocks, and they would make a better return. But so therefore, that's why I'm so excited about Alibaba. Really, I think they have a moat. They are building a moat. One is just the sheer scale of it. Everything is available there. Look at all of the major companies that are entering into China. All the luxury people. Where do they go first? They all go to Alibaba first. You just have to be there because they're 55% market share. Now, you might also then go onto JD and PDD, etc., depending on your positioning, but you always are going to have to go to Alibaba. And they have this sort of Amazon Prime type subscription model. They got 35 million paying subscribers on that so far, and that's growing quite nicely. And so that's one of the things I'd watch out for example, how quickly can they ramp up that subscriber base? Because once you are subscribed, once you have Amazon Prime, for example, you are very unlikely to go and shop somewhere else for the same thing because you get benefits from that. So I think that is part of their real moat building. So that is, in fairness, one thing I'd really watch out for in every quarterly earnings call, which of course we cover here on this channel every single time. So all you guys have to do if you want to join them is hit that subscribe button and join the 14,000 plus who've joined us in the last 2 months here, guys. I really appreciate your support. What's NIO's market cap in 5 years? 500 billion. What is it now? Where are we now? We are now at 58 billion. Okay, we've come down a little bit from the 80 where we were at. So you are basically saying 8x growth in 5 years. Look, it's possible. If you look at, let me show you this, guys. My, where is it? This is our Patreon, guys. So I have here a discounted cash flow model here. This last one I did, and I did this one after the last earnings call because I was feeling a little bit more cautious because of the chip and battery shortage. So I lowered my target from about 80 to 60, which now most of the analysts seem to have followed. If you were CICC did the same thing last week. So the simple way of looking at this is basically just this table here. So I'm basically growing the numbers of cars sold each year by 100%. And that gets us to a fairly decent stock price here. But it doesn't get us to what you're talking about, 500% up. At the moment, this gets us to 37% up. Now, there are ways of thinking that we could do more. So I'm putting in here that we are selling this year 84,000 cars. Now, most analysts think we're going to sell 93 to 96,000 cars. I like to be quite cautious with these models because I can always put in lots of numbers and that gets me really exuberant, but I like to look at more of a base case and I can take it from there. And this base case, guys, gets us to somewhere between 55 to 71 US dollars in terms of stock price. So I can, of course, increase these numbers a little bit. And in 2024, I'm looking at 586,000 cars sold. They could do better than that. They absolutely could. And I think there's a fair chance that they will. Certainly, if they start exporting, which they will this year, and that goes well, they certainly could. In China, I'd say their market share is about 700,000 cars. And why do I say that? Because that's what BMW is selling. That's what Mercedes is selling. That's what Audi is selling. They're all three of those BBAs, as NIO calls them, are selling slightly over 700,000 cars. So that's a similar price point. NIO, I think, in my view, does need a sort of BMW 3 Series or Mercedes C-Class or Audi A4 equivalent, that kind of a little bit smaller, medium-sized, but still a kind of luxury car. And I think that could take them beyond that, quite frankly. So if you thought that we would get a, let me just see, if we put that up here a little bit higher, say, we get to 730,000 cars, then that you just saw that up here at the top, right? Let me do that again slowly. If we say we grow just in that 1 year, we grow 150,000. No, we don't changing anything of the other stuff. Then that gets us to 72,000 as an example, right? The other thing I've put in here, and that's actually the one thing that I'm really excited about, is that's autonomous driving. So autonomous driving. So to me, the margin here of a car sold in 2024, I'm assuming 19%. Tesla's at about 20. NIO should actually do better because NIO makes a premium car. They sell them at higher prices. So again, you could say, well, let's make that 25%, right? Then you get to $84. You see the top. So you can kind of play with this, and I really encourage you guys to do that. You can just get there through the Patreon link below, because it gives you more of an understanding of how these companies are valued and how they operate. Now, what I'm really excited about is autonomous driving. So I've put in autonomous driving only in 2024. You might get a little bit of it before with sort of more level 2, level 3 autonomous driving, which is what we just saw that NIO's NIO Capital's investment into this trucking Inceptio company, that they're actually going into mass production with level 3, level 4 this year, which is incredibly exciting. So I'm putting that in here at essentially 1,800 RMB per month for 1.5 million cars times 12. Now, of course, by the time we get to 2024, once we have that out, people will be looking not at 2024 valuations, they'll be looking at 2026, 2027 valuations, and they'll be saying, well, if they sell the 700,000 cars this year and next year and the year after, then we have 2 million cars on the road that are going to give us that subscription revenue. So this whole chart is in millions, guys. So up here, I think you can see that if I change the 1.5 million to say 2 million, then that gives us, again, an extra $6 up there. So you can kind of see, you can work your way up if you like. Depends on how much forward looking you are, but I'm looking at this from today's point of view. So if you're looking at, if you are transporting yourself into 2024, you really need to make this into a 10-year program, and you need to project what's going to happen in, say, 2028. And then you could, of course, say, well, that's another 600% growth or something based on 2024. So if you just do that, then you are getting to $200, and then you're how many cars will be using autonomous driving by then? Well, say it's I don't know, say it's 4 million cars, but perhaps not quite. Perhaps it's 3 million cars. And then you're getting to $200. So that's kind of how the whole thing works forward. Let me just undo this, guys, because this is all live and our Patreon guys are looking at it. So this is my now. I am hoping that we'll be able to adjust this by the end of Q2, when we have a little bit more visibility on chips coming out and batteries being available. So I hope that's helpful. Honestly, I do really encourage you guys, if you're invested into any stock, get your hands on the discounted cash flow model. I've got quite a lot of them up on the Patreon. If you want them on particular stocks, also just ask me for it on the Discord, and I'm amenable to making them. And then you can play with them, and it gives you an understanding of just where the valuation lies. Actually, for car companies, I don't like car companies. I like cars, but I don't like car companies because, generally speaking, they make sort of 10, 15, maybe 20% margins, and I can't really do any more than that. The steel doesn't allow you to make any more than that. But autonomous driving as a service, just driving as a service, all that sort of service subscription stuff, that's where the margin is, that's where the money is. That you can make a 95% margin or something like that, whereas on cars you cannot. So that's why I'm excited about NIO, because I think they are at the very forefront of autonomous driving, at least in China, which is the world's largest car market. So quite frankly, even if you forget about all the other, I haven't put in any international expansion revenue or any of that, because to me, at this point, this is actually irrelevant. To me, this is all just about China. They do well in China, they're going to do very, very well. So Michael, welcome to the chat. You're saying, I like NIO, however, the market will saturate with EV players. I think NIO doesn't have a lot of time to get in place. Your thoughts, Michael? I think that's an interesting question. I think, okay, for all the guys who are entering now, the sort of Baidu, the Apple, like all these kind of tech companies, Alibaba also, it takes them about 3 years to really get a car to market, right? And then they have another year of fixing and recalls and tweaking, and then they put out another model, and then they're kind of flying. So it kind of takes them 3 to 5 years to really get somewhere. So NIO has that advantage. They've done that, right? They've been around since essentially 2016. They've got that 5 year ahead. Now, who's going to catch up? It's the ICE companies. It's the dinosaurs. And join us tomorrow, guys, because we're doing tomorrow evening. I'll put a live out. We're doing a live anyway on the market, but tomorrow is also, and I say tomorrow here because it's from Hong Kong basis, in Europe on Monday. I should say Monday, is Volkswagen's first battery day. And I think that'll be a really interesting one because Volkswagen to me is a dinosaur of this car industry, but it's a huge dinosaur with huge resources and lots of money. And if anyone can turn it around, they can. So I think it'd be really interesting to see how are they going about it, how quickly are they going about it. So the competition, I think, will actually come from a lot of the old ICE companies in the long run. And say if you've been driving a BMW for the last 20 years of your life, you are likely to buy the new EV BMW. However, there is an opportunity. I mean, look at when all the Japanese cars came in, right? I mean, lots of people now drive Lexuses, and before they were always driving American cars or, other mostly Japanese high-end cars that have come in. So a company like NIO doesn't need a Tesla-like market share because they're making premium expensive cars. So your comparison point there is, they want to sell as many cars as, say, BMW or Mercedes or perhaps Audi. And that's it. They're not going to have a 10% market share of the world. That's not their ambition. Now, I know they're launching with JAC a mid-range car under a different brand. But I think, again, that's very much a domestically Chinese target. And they might well benefit from that. Just like, say Volkswagen has premium brands and lower brands, or Toyota has premium brands and then Toyota brands. So yeah, I think that's really the play there, and that'll be good for NIO also because it'll just lower R&D expenses over a greater number of cars and that sort of thing. So I think for NIO, I'm not looking at world domination. I'm looking at them doing very well in China, and it would be wonderful if they could do well in, say, Europe and to some extent in the US. But really, for me at the moment in my models, in my valuations, I'm not actually looking at that yet. Why? Because it's quite hard to predict. It is quite hard to look at. I think they are likely to do well in Scandinavia because there's such huge uptake of EVs. And quite frankly, the ICE cars companies are still behind. They haven't quite caught up. And I mean, Asian cars from a comfort and an interior point of view, I think are still light years ahead of their European and American competitors. For example, here in Hong Kong, the most popular car is a Toyota. It's a Toyota 7-seater. They're Alphard and Velfire, the two big models, and they're big, they're huge, they're comfortable. It's like sitting in a business class seat. Everything inside is just right. So much space, it's lovely, windows everywhere, glass roof, all of that. Now, excuse me, guys. If you sit in a Mercedes van, you feel like you're sitting into some sort of government minimum utility vehicle where everything is kind of a bit plasticky and it's just not comfortable, right? Now, and that's the difference. And Mercedes has just realized that, and they now have an upgrade you can pay for to make the interior more comfortable, a little bit more like a Toyota, but then that's at a higher price point. So I think from a consumer-focused sort of point of view, Asia is ahead in terms of they provide comfort and good service. That's really what they're looking at. Whereas I think the European manufacturers are a little bit stuck on the engineering side. Okay, they have great engines, great motors, and all that kind of stuff. Fantastic product reliability, but on the interiors, I think they are a couple of years behind. And I think consumers are starting to realize that. It's a little bit like, I mean, no one of us has flown for a long time, but try flying a European airline and then fly Cathay Pacific or Singapore Airlines or Thai Airways or any of these Asian airlines, and you think, well, one is from the 80s and one is from the future. So I think there is that difference. So I think there is an opportunity for companies like NIO to actually get a chunk of the luxury car sector, also in Europe and in the US, but it'll take them a little bit of time, absolutely. So, right, guys, you're talking about solid state batteries, says Harley there. A company called QuantumScape, huge team in Dongers. I know QuantumScape, absolutely. They are a good company. Here we go. Okay, we can have a quick look at that, see what's happening here with QuantumScape, not on an hourly basis, but on a day basis. Let's just reset this here a little bit. So also nice recovery play we see here. You can see basically that's our general trajectory. Flattening out a little bit the last couple of days, but still managing just about, well, not quite, but anyway, finishing the day off in a positive. So really what it's struggling to get over here is the 58.91 mark, and that's a Fibonacci resistance line here. It hasn't managed to get through that for 2 days. It has managed a higher low though, and that's positive. So you are still having a positive trajectory there. What I would be slightly concerned with down here, guys, is that volume is falling off. And you don't get great rallies with volume falling off. So I would really watch out for Monday. Is that volume going to pick up? Yes or no? You can also look at pre-market volume. I think it's Market Chameleon, I think it's a website.com that shows you pre-market volume quite nicely from a comparison point of view. So we can have a look at a couple of indicators here on QuantumScape. Let's look at Williams R here. So that's a clear buy signal here on the 10th. When it crosses that dotted line here, let me put in a thicker line so you can see it. When it crosses that blue line here at 50, I'm trying to get it at 50, but I've got it slightly off here at minus 49.70, but it doesn't really matter. That was a buy signal here on the 10th, and then I would imagine MACD would give us a similar one. Wow, that's small, hey? Even I can't see it. Yeah, there is also. Can you see that here? The blue line crosses the orange line here, giving us a buy signal on the 11th of March. So pretty much the same time. So momentum is looking very positive on this. It is. I would just watch out a little bit here for this relatively low level of volume. Only 6.8 million was the volume here on the last trading day. So for me, that's the one thing I'd watch out for. But otherwise, this is looking pretty stellar. And just watch out whether you can get through that resistance here, which sits at 58.91. If we do, we have a chance to get back up to 64.66, which will be basically just under 65 will be the next resistance line at the top. King of Clowns, I said, to dominate China, you need to produce affordable models, possibly under 50K. Well, I think they don't want the word affordable, quite honestly. King there. That's not the business model. They do not want to compete directly with Tesla like that. They're always going to put out premium models. So I think they will put out a sort of BMW 3 Series type car, which is of course somewhat cheaper because it's smaller, but it's still an expensive car considering its size. So I think that is kind of where they're going to go. They could put out a sort of, like a Mini or something like that, but it would still be a very expensive small car. So I don't think the word affordable fits in with their premium strategy. So it isn't a Tesla-like company. That's not the idea here, right? They want to be a premium company. So once they hit 700,000 cars sold in China, I think they're going to be very happy. I sort of think on that. What's your thought on Toyota hydrogen fuel cell vehicles? Will this technology be better than EVs? I think hydrogen fuel has a future. We saw yesterday, I think it was Sinopec just announced they're putting in hydrogen fuel stations, whatever you want to call them, refuel stations. And I think in 3,000 of their petrol stations in China. Sinopec, of course, being the company we talk about quite a lot for their partnership with NIO. So I think hydrogen will mainly go into the commercial side, I think into trucking, because if you want to move a heavy vehicle like that, the batteries would be so heavy that it would make the whole thing so heavy that your batteries, again, would not be used. So at the moment, basically, for each battery you add, you don't really make it any better. So you would just have to have a truck driving batteries for the truck that is using the electricity. So I think that's kind of the challenge there for trucks at the moment. The battery technology is simply not quite there yet. Now that'll change. I think that will change, and obviously Tesla is doing that there with the semis. But for the moment, I think hydrogen for long distance trucking is the future. Toyota is a funny one because they are building EVs, BEVs. Also, they're building hydrogen fuel cell vehicles. Yet at the same time, their president keeps basically saying that he does not think that EVs are the future. So it's kind of an odd one. So that's why I'm not hugely bullish on Toyota, because I think they are one of these dinosaurs. It's like, I imagine like a big oil tanker and you're trying to turn it around. Try to stop an oil tanker or container ship. You know how long it takes from the time you stop and go into reverse? About 15 miles. And I think that is where these companies like Toyota are at the moment. They're kind of trying, someone pressed the stop button, but they're still going to move ahead 15 miles more. So I think Toyota is a tricky one. They might turn it around eventually. I mean, Volkswagen seems to be perhaps the more proactive in turning things around, because they are seeing, whoa, our business will actually disappear in the next 20 years. So we really need to do something about this while we'll still have money. So I'm a little bit more bullish on VW at the moment than on Toyota. Marcus, are you seeing solar power in cars? I don't think, no, I haven't really. Okay, there are some prototype cars you see out with solar panels on them. But I think at the moment that would only work as part of a hybrid. I think that could create some electricity, but I don't think the solar cells are quite there yet that they are going to be able to get that quantity of power going. With a hybrid, it might work a little bit because, you're braking and all these kind of things that all creates an energy. Just rolling down a hill creates energy. But I haven't seen that yet. I don't know whether that's possible, because think about how much electricity you need when you put your foot really on that gas pedal, right? If you go from 0 to 60 miles an hour in a couple of seconds, you really need a lot. And you can't just be like, well, have the clouds moved, And you would still need, of course, a big battery in there. So I don't know. Maybe in the future that'll come, but I think for the moment it would be a relatively small percentage contributor to the energy that you really need. So is Monday going to be green or red, says Bobby here? Well, when you look at the what are our futures here, the Nasdaq future is slightly in the red at 0.95%. That generally predicts a negative opening. The Nasdaq volatility is up, which also predicts a negative opening. However, the volatility index for the S&P 500 is down 5%, which would imply a green opening on the main market, the S&P, and perhaps a not so green opening, slightly in the red on the Nasdaq. So I keep an eye on those VXN and VIX, and also the NQ1 exclamation, which is the Nasdaq 100 E-mini series future. They are quite good short-term predictors of what's going to happen. So a lot of this, of course, guys, depends on what we opened this call with. Is on the 10-year bond yields. And at the moment, they're down a little. They're down to 1.54. But if the trajectory of that continues to, we had it open over here, didn't we? Let me just pull that open again, guys. If the trajectory on that continues to go up, and we have JD.com on here, like it has here, let me make that a line again, guys. So the worry is actually, I don't think it's really where we are, but it's just, previously we had this kind of a trajectory, right? So we are rising at a relatively modest pace. And then from sort of late January onwards, we are now on this new trajectory here. And that is what worries people. It's the trajectory of it, the speed at which this is increasing. Because if you take this forward a little bit at this speed, then you will get to 2 by 10th of April. And that would certainly hit the tech sector here. That we don't know if that's going to happen. Certainly, the Fed is doing its utmost to not make that happen, because they are worried about employment, or unemployment rather. And this wouldn't help higher interest rates, right? But so, the Fed still can do quite a lot of things. They could simply start buying long-term 10-year, 20, 30-year treasury yields, bonds, and that would lower this, because that's how it works, right? If the bond price goes up, your yield goes down, because a bond that gets listed at 100, say with 0 interest for simplicity, when it drops down to 90, you get 10% interest, right? Because if you then buy it at 90, you are going to get, well, depending on the time frame, of course. If it's a 1-year bond at 90, and it drops to 90, you would get 10% in the next year. If it's a 10-year bond, you would get 1% each year over the next 10 years. I'm simplifying this. So if you push bond prices up, your yields drop, and the Fed has done that in the past. So they could simply go and buy some long-term some government bonds, and therefore they take care of the problem. Micah's talking about the solar here. You could get a bit of a boost there if you're, exactly, especially if you live somewhere really sunny. And that's, I suppose, the other issue with it. You have to live somewhere where it's, if you live in a desert like California, then it works. It would work here in Hong Kong too, because it's sunny a lot of the time, except when it's rainy, when we have monsoons. But so it would work in certain climates better than others. Now, in the long run, solar will get much, much better. And actually, when it's a cloudy day, there's still loads of UV about, right? So they'll still be able to do that. But I think in the short term, it doesn't really solve the problem. of doing that. It might give you a few percentage points. So you might see it perhaps on the top of a truck. Because if you, as a truck, reduce your carbon emissions 3% or 5%, your carbon offsetting from a trading point of view might make you enough money for that to make sense. Or you could see it on container ships. Some of them now have sails back, right? I don't know if you've seen that. Hapag-Lloyd, for example, has sometimes sails on the front of a container ship, and that reduces their fuel consumption by, say, 1%. But that makes a lot of difference, 1%, especially when you are in a business where your margins are only a couple of percent. Reducing one of your main costs by 1% makes sense. So I think the applications will likely be more in the commercial sector there. MACD on NIO is indicating a sell day, so Fox aren't there. Can you analyze compare Tesla and NIO share volume in the last 5 days, Felix? Absolutely. Your wish is my command. Here we go. Here is, right, let's pull it up. Tesla's at the bottom. Let's get NIO at the top. We need some volume down here. So if you look at volume, guys, you can see, I don't know how clearly you can see that here, but at the top left, there is a little green number here that says volume. I know I'm pointing at a screen, it doesn't help you, but you see that up here, that says volume and volume. Now, stock prices are, of course, different. So these are nominal volumes. This is not value of volume. So yesterday, well, last trading day rather, NIO had a volume of 113 million and Tesla 33 million. But of course, stock price multipliers, the amount of money moved here is different. The volumes are actually on a very similar trajectory. You can see, if you can see that down here. So this is NIO and this is Tesla. It looks incredibly similar. So actually, I think their volume is also moving basically the same. You can't really make a differentiator there because the headline figures of, if you look at it's 113 million volume on NIO, that's more than 3 times more than Tesla. Yes, but the Tesla share price is at 693 and NIO's at 45. So the amount of money involved in Tesla is substantially higher, of course. As Fibonacci tell you, it's overbought with NIO. I don't think Fibonacci quite says it, but if you look at Williams R here, wrong chart. We got Williams R. Where's Williams R? Here it is. I think I would say we're not quite there yet. I mean, if you look at it on a sort of an hourly basis or more short-term basis, then possibly. But I think that this line here has a bit more to go, quite possibly. It might also zigzag a little bit, of course, but we can go quite substantially into the overbought territory here. That is entirely possible. But thanks very much for that comment. I'm more bullish on NIO than Lucid. Lucid hasn't proven to deliver anything yet. Everything still promises and speculation with them, says King of Clowns here. True. I do think, though, if they do pull off their product and it doesn't go up in flames, and they do have pretty good backers behind them. They started off with BAIC, the Chinese state-owned company behind them. They obviously have their Tesla employees. They have the Saudis, and all these guys have a lot of automotive industry experience. So I think I'll expect them to do a decent job. And then think about it, they are an all-American company. American investors will like that. And they'll like to pour money into it because it isn't a Chinese company. Therefore, you haven't got that sort of China discount situation for stocks. And you're not, they're American audited. All these kind of things will be a big advantage for them down the road. So I do think Lucid actually has a bright future ahead of them in the long run. I think at the moment they are in a period here, and you can see that at the top here, where actually the indicators are saying that they are oversold and continue to be recovering a little bit now. And a lot of that, of course, was the whole sort of unpleasant sentiment that came out of the way they listed. I think wasn't particularly elegantly handled from a PR point of view, but some people made a lot of money, so that's all that matters. So yeah, these kind of speculative things I think really hurt a stock in the short term. In the long run, people will forget about it and people will start to look at the actual company. What's their market cap now? It's 6.9 billion. So I think you could see that might 10x, provided the EV sector continues as it is. Not overnight, but in the long run, if they deliver cars that are good, that people want to buy, and they bring out cars that are a little bit cheaper, and they manage to get them out on time, they haven't got too many recalls, and generally speaking, people like the brand. There is a risk with companies like that before startup. I'd say it's 50-50 whether they go out of business or not. Because until you have really sold tens of thousands of cars, you haven't really proven the business model. But having said that, I think there is every reason why they could do very well. So. Michael, thanks very much for joining our Patreon. It's lovely to have you guys over there on the Discord also, guys, where we chat about all sorts of things, and we share. Also, I share a lot of information in advance, of course, of the videos, and also a lot of stuff just doesn't make it into the videos. For example, here I put our chart analysis up here before everywhere else, and it's a very happy and very nicely fast growing community, guys. So it is also, I call it sometimes it is a sort of, Alibaba or NIO anonymous group when the stocks are tanking. It is quite nice to have some people who are in the same boat to talk to at that particular time. ID, first rely on technicals, then news and speculation. Well, yes, that's a way at the moment people are listing. I quite agree with you on that. Perhaps not the greatest way of doing it, but okay, there are a couple of questions here. Oliver's asking about TCEHY. Let's just pull that up over here. TCEHY. Right, here's the stock. Okay, so I mean, Tencent as a company, again, I think it is a fantastic company. As always, guys, it's not financial advice. This is just me entertaining here. Lots and lots to it. I mean, it is a streaming and gaming company with a fintech business, right? It's kind of an unusual setup, and it has, again, this enormous array of investments into everything, into NIO, right? They're a NIO investor, and they invest into loads of other things as well. So, I think it is a very unique company. I suppose the question really is one of valuation long term. It isn't cheap. I mean, if you look at, let me close some of these charts down here. And it gives you a feel of the meteoric. Let me put that into percentage, actually, and it's easier for everyone to see. So if we start at, okay, this is a little bit too far out, perhaps. Start at 2020, it is up, well, it's now up 70%. So you might think, well, that's not too bad. It's true, it is perhaps not too bad, but if you go a little bit further out, well, yeah, it is, up 300% or so from 2016. It does have these, and that's kind of the tech sector. This was 2018 here. That was 2018, the high here, and then we had a 2015 tech bubble in China, which you see now, it seemed such a big deal at the time. Now you can't see it anymore, and I think that's always something to think about. Is that even the biggest crash in the long run is just a blip on the little chart. 2015 was a huge deal. We went down 40% or something in the market, and now you can't even make it out anymore. So it is at a peak. It has come down quite a bit. The question, I suppose, therefore, is there was actually a bit of Chinese government support for the market last week or so. They were buying in actual stocks, and they do that because they want stability. They don't like high volatility. They want the stock market to do its sort of sensible thing in the long run and not be a speculatory play. Let's have a look at a couple of indicators here. So it was interesting, actually. It has just touched pretty much. It's slightly above the 100-day moving average line here. Can you see that? And typically that is where it has rebounded from. You can see that here. If you go back historically, it is typically trading above its, see, when it goes below, it tends to recover. We had some periods here in 2019, but that was, COVID and everything going on, where we were below it, but we tend to recover back to and then above the 100-day moving average line. So that you could, something to watch out for. If it dips below that, that might be an interesting entry point. And then if we look at RSI here, that is not giving us a buy signal here. It hit the 50 points there, and then it sold off again. You can see that here. And then it's sort of gone back down again. So that was a not really, so it's struggling a little bit to get up. You have these kind of periods like here, where you don't really get clear momentum one way or the other, which is why I think it is always better to wait for things to go down a little bit and then buy that. That is fun, whereas buying this sort of zigzagging isn't. So at the moment, they are basically moving sideways according to RSI. Let's have a quick look at MACD. That gave us a sell signal on the 16th of February. You see that here. And that was a good call, right? That would have gotten you out at about $96, and now we're at 82. So again, it is not giving us a buy yet. There isn't a turnaround yet. See these red bars? That's the momentum here. The last one, in fact, for the last day is bigger than the previous day. So this is not, at the point, from a momentum point of view, I'd say this is, momentum indicators are not indicating a buy at this particular juncture. Smack that like button here, says Fact Sound. Yes, guys, I do appreciate that. If you hit that like button and just hit that subscribe button, you get all this wonderful content and it gets suggested to you then on your homepage, on your feeds, and you see wonderful videos you wouldn't otherwise see, guys. So all you have to do is turn on those little alert bells next to the subscribe button, guys. So, okay, let's run through a couple more stocks here. Somebody threw out Candy. It was Candy. I haven't looked at this actually in a week or two. Whoops. So what's going on with Candy? So they are seeing also a similar recovery play to most of the tech stocks here. They're doing that. Let me see if I can move this up a little bit. Volume down here. Actually, let's zoom in a little bit more, guys. Otherwise, hard to see what we're looking at. There we go. Volume pretty low. That's really what I would look out for here from a... This is not a great rally because the volume is falling off each day. Now, earnings around the corner. Maybe people are just sitting and waiting. But you see here 4 days of volume falling off. And at the same time, the stock actually goes up more or less 4 days in a row. At least, yeah, sort of. So that isn't a particularly strong rally here. Now, the 666 support line seems to be holding here. We almost touched that yesterday, and that is a pretty good support, I would say, 666. So watch out for that. That's a pretty good, easy number to remember. If it does drop below that, well, then you have a great big gaping of nothingness, according to Fibonacci, down to 533. Fibonacci seems to like 66 and 33 numbers on this occasion. There is, of course, a little bit of support. There would be some here at 593 or thereabouts. Why? Because that was the low of 2 days here, roughly. My lines are never exactly precise, guys, because they sort of snap into place and they're a bit fat. But you know, around about that 590 mark, there will be some support. From a tech indicator point of view, let's have a quick look at Williams R here. Williams R gave us a pretty strong buy signal here on the 10th of March. There we go, which was perhaps not a bad call. It has gone up somewhat since, but I wouldn't say it just doesn't look like the strongest rally to me. So, you know, I think really what I would do, guys, if you're interested in Candy, listen to the earnings call, and then you know a great deal more. And according to this piece of software, that's on the 15th of March. That isn't necessarily always accurate. Sometimes they get these dates wrong, but do check that out. I think anyone who's invested into any stock once a quarter, spend 1 hour, listen to the earnings call, and you are much, much wiser. I really recommend that. And for a lot of the stocks we cover here, guys, you can simply do that through our channel. All you have to do is hit that subscribe button, guys. Thanks very much. Nice cravats, Spanish John. Thank you very much. King Ron said, yes, you're talking about BlackRock there, and Brian Dees. I did a video on that probably about 2 months ago, something like that. Yeah, so Brian Dees was the sort of carbon neutral guy, or whatever you want to call him, environmentally friendly chap at BlackRock. So he was in the Obama administration. He negotiated the Paris Accord, the climate agreement for the United States under Obama. He also did the bailout of the car companies at the time, Ford and GM. So he knows a lot about cars. And while he was at BlackRock bought a huge amount of NIO, 3 billion, you king of clowns there. So you're probably right. I haven't checked the number in a while. And he is now the head of the economic, what do you call it? National Economic Council, which is basically the senior body in the White House that determines economic policy. So he is obviously very much into climate change, or against climate change, I should probably say, and very much on the EV bandwagon there. And I think you are going to see in the US a lot of tax incentives, tax credits for EVs. You might even see these sort of cash for clunkers type things back. Why are they waiting? I think they're formulating the policy, and I think they also want to make sure that companies like GM and Ford can benefit from it with a couple of cars out. If it is just a Tesla subsidy, then it isn't really that useful for them, because they want to keep, the sort of GM and Fords of this world alive. So Okay, Andres say SNDL. We should look at SNDL. It's quite an interesting stock, SNDL. I've done some coverage on that, guys. Also, here we go. So Sundial, this line I drew in a couple of days ago. Very similar story actually to most of the tech recovery here. We saw that pink recovery line there. A little bit the same word of caution is that volumes aren't massive by Sundial standards. Now that is distorted because Sundial is at the moment a sort of meme stock. 244 million shares traded here, but they were on the highest. They were at 2.6 billion. So it is all relative. But in the long term, actually volume was a little bit more muted. It used to be sort of 15, 20 kind of type million. So it is still relatively high, but it isn't. And if you're wondering what I'm talking about, guys, down here when I'm pointing the arrow, those are little volume bars. So yeah, not the greatest volume here on a recovery. What are we aiming for? What are we shooting for? So we basically didn't exceed the day before. So 142 I would put in here now as a resistance because we've done that 2 days in a row. And that psychologically builds a resistance. People are thinking, well, we might not get over that again tomorrow. And we also had, there was a day here a couple of days ago. Can you see that little really, really tiny thin green bar there where we actually started the day on that too. So that is a bit of resistance. And then I'd put in another one at 148. Which is the high of the 10th of March and also the high of the 26th of February. So those are kind of the things you need to break through, and they're very close together. And then Fibonacci tells us that 164 will be the one that might hold us back. Now, Sundial, I think it's a good company, but valuations are pretty lofty because of all this GameStop speculation. So I've been running some sort of models on that, and it's pretty hard to come out with an actual valuation substantially above $1. I would say I think it's a good company. I think it's a good business, but I think really where you would have expected it without this kind of madness with GameStop, etc. I think the stock would be down here somewhere. Around that moving average line, and then they might have a chance. But and that was at 60 cents type thing. So the moving average line 100 days is at 74 cents. So I do think the valuations there are lofty, but in the short term it might be a good play, provided that the Reddit crowd continues to be bullish on it. So thanks very much for that question. Can we look at KLR, guys? Okay, I can't get through all the questions, I'm afraid, guys. If you want to be prioritized, all you have to do is join our membership or our Patreon, and then I know who you are, and of course I'll prioritize you guys. It's only fair. So again, we have here higher lows each day, which is nice, and then in fact actually quite a jump here on the last day, where the low is actually much higher. So that's actually a positive, even though it is down on the day. This is still moving in the right direction. You can see that little line there. Let me magnify that for you. See that tail of that last candle there? It was actually at a very high level. So we have less volatility, and that is good. But, and here comes the but. You see that down here? Volume, same story. So we are seeing recoveries, but with falling off volume. When you get that, it basically implies to you that the rally is going to fizzle out, or at least there is a good chance of that. When your stock goes up, you want increasing volume. When your stock goes down, provided you're long, you want your volume to fall off, not vice versa. So we're seeing that here. Right, guys. Okay, let's do a quick recap then on NIO. I think a lot of you guys have just joined and you're wondering what's going on with NIO and why we're talking about all these other fairly random stocks. Well, they're not random, of course, but nevertheless, let's have a quick look at NIO, guys. I'll put it up here again. So we were looking at NIO, Tesla moving here very, very similarly. That's why I had Tesla up down here. Really, basically the same chart pattern. Now, let's look at NIO again here as a recap. So let me zoom in a little bit, guys, so it's a little clearer for you as well. What are we seeing? Well, we are still on a positive the trajectory. Our low yesterday was pretty much the same as the day before. It was, in fact, 4 cents higher than the day before. You still have a higher low. So even though the stock's down a little bit, I look at the lows quite a lot because I think that gives you a pretty good indication of whether you are still on this kind of trajectory. And we have come out of our blue kind of path here, but we are still very much moving in this direction. So that's positive. Now, our indicators gave us a buy signal here at the end of the 10th of March. This software doesn't let me put the line in exactly the right place. It should be a little bit further to the right here. Basically, it should be where. Let me put an arrow in here, guys. One sec. It should be right there, where that blue line crosses the dotted line. That's where it should be. So it's at the very end of the 10th of March, where we got that buy signal. So with that is positive. That's positive momentum. And if we look at MACD, that is just about turning positive. Why? Because MACD it lags a little bit there, so that might well give us a buy signal on a day-by-day basis come Monday. Now, what are the points to look out for? We're close to 45.50. The blue line above here is our resistance. That's 46.12, and above that, I need to zoom out a little bit, otherwise you can't see the lines. I want to move that one, did I? So on the way up, basically, we have 46.12 as a resistance and then 49.45. That's really what we want to break through. If we go in the southerly direction, then we have very solid support at 42.75. Now, I do think, or below that, it would be $40, basically, 40.19. So those are the points I'm looking out for. I do expect this to do a bit of zigzagging. And I think it'll be good for us to do zigzagging, because when we do these kind of rallies up here, then they come down just as quickly because we didn't do any zigzagging. You actually want your stocks to zigzag up in the generally positive direction. But so we are in what I'm rooting for actually is a bit of consolidation. I wouldn't mind doing a little bit of this, a little bit of that, a little bit of this, a little bit of that, and sort of working our way up like that, because that then gives you a support line that would run in that direction here. And each time you hit a low, you build support, you go up again. Next time you go in that direction, people buy in before you hit that low. So that's basically how I see it. At the moment, Nasdaq Futures are looking ever so slightly red. So it depends, of course. We also talked quite a lot here, if you just joined us, about the 10-year bond yields. At 1.54 at the moment, not looking too bad, but if that rises, these kind of tech stocks will get hit over the head, absolutely. But that is all a short-term matter. But at the moment, momentum is looking good on this. Volume is falling off a little, and that's what I would watch out for down here, guys. So I'm putting that arrow. Watch out for this volume. If it falls off each day, even though we are moving in a greenish directory, it basically tells you that the rally is fizzling out. So a bit of caution there for anyone who's looking at this very much in the short term. And Lily says, good to have you on the chat. Zigzag will be good. We can buy the dips. Absolutely. Dips are wonderful things to buy. Thank you very much, Lily, there, and thanks, guys, for all of your support, especially anybody who's joined our Discord community, our Patreon. If you want to get access to the cash flow models here, the discounted cash flow models, to more background information, charts, all sorts of stuff. I also just put up today again NIO's ownership structure over on our Patreon. All you have to do is click on that little link in the description, guys, and then of course you can also chat with me and the community during the day, not just during these lives. So I really appreciate all you guys who've hit that subscribe button. There have been more than 14,000 of you, which is absolutely fantastic. Thank you very much for that, guys. That's a wrap here. If you've missed any of this, jump back to the beginning of it. We talked about NIO at the very beginning and did a lot of technical analysis there, guys. So thanks very much. It's a wrap here from Hong Kong. Have a lovely Saturday or Sunday or Monday, depending on where you are in the world. Thanks for tuning in.